See, the way the rich or the wealthy purchased items, for instance, with money is not the way the typical person thinks of money or does it themselves. What I'm about to share with you is going to show you exactly the way to purchase an asset and to still have the money after the asset has been consumed or sold. For instance, let's use a Nissan GTR as an example. I'm going to show you how to purchase that car without actually using your own money, and when that car is gone, sold, depreciated, and done, you still have your original money. Let's dive into it.
Welcome to the Smack Fest, the beat down. The SWAT team is here on another beautiful day of shutting the week down.
And for just meeting, my name is William Dauria. I am a professional real estate investor. I have a portfolio of single family, multifamily, and commercial units. I live off of passive income, and I want to show you how to do the same. I retired at age 32 years old, and now I live my life on my own terms. This is how I now view money. See, the sooner you learn this, the easier your life can become. Now, this is not taught in school. You're not going to learn this in college. You're not going to learn this at a lot of seminars. This is stuff that very, very few people have either heard or understand. Now, there is a guy out there that wrote the book called Rich Dad, Poor Dad, Robert Kiyosaki, and this is along the lines, if not the same principles that he follows. And here's an example. Say you want to go out and purchase a fancy Nissan GTR. Let's use a fun car for an example. And you know that this car is a very fast car, you've always wanted it, blah, blah, blah. And you know that you're gonna be financially smart about this, and you're gonna buy a pre-owned one that's taken most of the depreciation hit. Say you bought it for $75,000. However, let's assume that, and this is just for this example, you have $75,000. Would it be smart to either finance that car or to pay it cash? Or the third option, which is a combination of. So the way I purchase vehicles, even if, and this can be used for anything, guys, it can be used for an airplane, a boat, you name it, something else. The way I purchase luxury items is that instead of taking that $75,000 and spending it directly on that luxury item, I go out and I find an asset that I will purchase with that $75,000 that will cash flow enough for the monthly payment, obviously financing the car. So basically, I use real estate as an investment vehicle. We're going to use that as an example. So I'm going to go out and I'm going to purchase a property for $75,000, $100,000, whatever you want it to be. So say I went out and I found a $75,000 rental property instead of spending $75,000 on the car. Here's what ends up happening. So because I paid for that property, it's going to cash flow much higher than just the PITI would have assumed, which is your principal, interest, taxes, and insurance, because you're not paying principal and interest because you paid for it with that $75,000. So now your cash flow is potentially, with the right deal, covering your payment to your car. And that cash flow is coming from somebody else's 9-to-5 hard work, not yours. And here's what happens. So say that car gets paid off in 5 to 7 years with somebody else's money. You now have a car that is paid off by somebody else's money, and that original $75,000 you still have in an appreciating asset that's still cash flowing, that has been appreciating all along over the course of most years. And if you purchase real estate as an investment vehicle to do this, you also get to take advantage of what's called depreciation. And basically, depreciation on a property like this would be, say, $75,000. You would divide that by 18.5 years. Talk to your CPA about this for more information, but divided by 18.5 years is your immediate deduction of your taxable income every single year. So you have your dream car, and you also still have your original cash. It's still cash flowing. You get depreciation tax deductions every single year, and now you can rinse and repeat, and do it again. So to sum it all up, instead of going out and buying that expensive car, you buy something that cash flows the payment to that whatever you want. So that is the way to accumulate more items of your desires without actually having to dive deep into your bank account, spend it on the vehicle that's depreciating, and then one day when you go sell it for 35 grand, you get the split of the loss, and that's really all there is to it. Or you could have somebody else go to work their 9 to 5, pay your bills for your items, all the while appreciating your asset, and you get 100% of the deductions. So guys, if you like this concept, let me know what you think in the comments below. Consider smashing that like button, and I will see you on the next one. Oh, I forgot. I just hit 100 subscribers. Thank you so much, guys, for all the hard work, or, well, hard watching, however you want to put that. I appreciate it very much. If you're new to this channel, consider subscribing, and okay, now I will see you on the next one.